Today's Cardinal lesson is about a new type of long-term care insurance. It's very popular with clients, and the reason is that the clients, which would be you, or your heirs, or your estate, or possibly your spouse, is guaranteed to get more out of this than what you put into it. So it's a popular idea. And so what we're talking about is hybrid long-term care insurance. And so the word hybrid is just where you're putting two things together. And in this case, it is the putting together of a life insurance or annuity policy along with a long-term care insurance policy. So we're going to make a hybrid here. And you say, well, why would I want to do that? Well, what it does is it guarantees that at your death, if you never use this for long-term care, you never use the benefits of long-term care, or you just use them a little bit, that your beneficiaries after your passing are going to receive the death benefit. That's the life insurance part. And the reason that people are buying this is really not so much for that. They're buying it for the long-term care benefits, and they really gives you some good bang for your buck. So, you know, and there's a term when this stuff came out a few years ago where they talked about live, die, or quit. And say, well, that's kind of harsh, and perhaps it is, but if you live, and you live a long time, and you need long-term care, you're going to be real glad that you bought it. If you die without using it, or just use it a little bit, your heirs are going to receive money in excess of what you put into the thing. Or the quit function is all of these policies have a, you know, I want my money back. So if you're making a single premium payment, and you're just paying one time, you know, you really wouldn't want to do that unless you were able to get the money back out of it if you needed it. Very few people actually take advantage of that, but it's there. So when a person purchases this policy by making a transfer of money to the insurance company, they can either live, die, or quit, and they're going to receive more back than what they put in the thing. So an advantage to this is you can never have a premium increase. So that's from a life insurance policy, everything's fixed right from the beginning. So that's one of the downsides of traditional long-term care. And you can also use it just like traditional long-term care for a variety of care like home health care, assisted living, nursing home. You know, it works the same way. So out of my book, in my workbook, in the long-term care section, we pulled out a couple of examples for this video just to illustrate. One of them is on page 43 of the workbook. The other one is on page 52 of the workbook. And see, you know, this policy, which is on page 43, it's a single premium life insurance policy that has a death benefit of $75,000. And it has a maximum long-term care benefit of $150,000. So you can't get both of these. But what it's going to do is if you were just to die without ever using it, it's going to pay $75,000 to your estate. If you needed it for long-term care, you're going to have up to $150,000 of death benefit. This policy has full underwriting, so they're going to look you over from head to toe just like they do with long-term care insurance. There's some of these hybrids that we have that are a little easier to qualify for. You also can use IRA money to make this funding. And it changes the numbers a little bit, and it's more desirable to use money that's not from an IRA, but a lot of folks, that's what they have that they can put into something like this. We can absolutely make this work with an IRA. And this gives you an example of the premiums. So in this case, a 55-year-old female would put in a single premium of $32,641, and then a single premium extension rider for the additional long-term care benefit of $12,000. So it'd make a total payment of $44,000 one time, and you're done, and it would buy this amount of long-term care, which is really $3,000 a month for 50 months. Okay, so not enough to cover a long-term care fully, but it's going to be some good coverage. You're going to be glad you have it if you need something like this. And then a 70-year-old person, instead of $44,000, it's a single payment of $66,000. But you can see that this is less than the death benefit of $75,000. So They're really just making a transfer. And folks find that if they have CD money or money that they're not earning a lot of interest on, maybe they didn't want an ongoing premium for long-term care insurance, they can do this with just a single payment. And if you wanted $6,000 a month of long-term care benefit, you can just double everything here. So this is just for an example, and it comes out of my book. Now, contrasting, this is a later example in the book, and it has the same $150,000 of benefit for long-term care, but it has also a death benefit of $150,000. It's double this one. And you know, so you look at that and say, well, I like this one better. Well, and you might over some things. This also has full underwriting. Might be a little bit different because of but what I mean by full underwriting is just how easy is it to get if you've got some severe health conditions. And I want to, at this note, if a person gets in touch with us, we're financial planners. We have a whole selection of products. I'm just talking about 2 of them with a selection of companies. Even if you do have health conditions, we've got something for you. So in this example, what we've done is we've shown a 55 female and a 70 female, but the difference is here, if you want to pay for this one by the year, if you're 55, it's $2,400 a year. If you are 70, it's $5,490. It's actually more than double with a person who's 15 years older. If you wanted to just pay for 10 years and then stop the premium payments, you know, here's what they are. And then this also has the single premium one-time payment option where you just pay, you're done forever, but regardless of what option you go, premiums can never increase. So we've illustrated in my book, and there's actually about 7 or 8 examples in there, all having similar benefits, different way to fund it with different underwriting. The book is the Complete Cardinal Guide to Planning for and Living in Retirement. It's available on Amazon. If you go to our website, you can get to Amazon that way. You can also download the long-term care chapter in this book and the long-term care chapter in my original book. It doesn't cost you anything. It's free at cardinalguide.com. There's our phone number. I'm Hans Scheil, and I thank you for listening.